Hi everyone, good morning. Let's just wait a couple of minutes. Good afternoon. Sorry, let's just wait a couple of minutes to wait more to join us today. Okay, let's start. It's already 5 o'clock, so let's start our webinar today. Hello everyone, my name is Jenny, and today I will host this webinar for you guys. So before our webinar, I like to say our webinar is purely for the educational purpose. We will never give you any investment and suggestion. So if you want to do any trading, please do your own due diligence before. Please take note of that. And now let me introduce you guys my team. So our firm is the Average Fortune Group. So we have the Desmond Long, Cathedral, Jenny, myself, and Joanne. So today I will host the webinar for you guys. So now let's start. So we start with the DXY, right? So firstly, I'd like to share with you guys some news about the dollar index. So as you guys know, here today is no very key news for the dollar index, but the markets still have the expectation that the Federal Reserve will increase the interest rate for 75 pips and BPs on September. So here is before in a long time the market is going up, right? So now let's have a look at our today's market. Okay, so here is our DXY chart today. So firstly, we still use the 4-hour chart because we are doing for the 1 day to 1 week forecast. So that's why we use the 4-hour. If you guys don't know that, let me explain to you. Okay, so firstly, as we know, the X-ray really increased a lot in recently because of the expectation of the increase of the interest rate, right? But now we can see the after reach the 110, the price is put back for a bit, and now the price is 107.8. So now let's draw a trend line first. So you can see the price has already break the ascending trend line, so I like to change it into right. Additionally, if you follow the price of the DXY, you can see the price has already break our previous very key support line. Here is around 108. So now the price has already break this very key support level. So now for the next support level, I like to put it around here. Around 107.6 here could be our next support level here. And if the price can break this support level, I think the next one could be at around here. So here is the price touches this area for a lot of times. So if you go back, you can see here could be overlap support level, because here a lot of touches, right? 1, 2, 3, 4, 5, 6, right? So the price try to test this area for a lot of times. But we have to wait the price break our first support line first. Okay. And then if the price cannot break our first support line, it may continue our it may pull back from here, right? And then the next resistance level, I'd like to put it at around here. Because here is us I think here could be better because here is a very key resistance level. Here is our previous swing high, right? Swing low to swing lows, right? So here could be our next key resistance level. And now we try to use, now we try to use some Fibonacci tools to help us confirm our idea. So here is, you can see, when we use the Fibonacci tools, it must be in a very clear market trend, and our Fibonacci trend line should also very close to our market trend, right? So if you use the Fibonacci tools, please take these 2 points in note. Right, so here is our swing low, and here is our swing high, right? So we draw from our swing low to our swing high and try to find some Fibonacci tools. I think the 50%, yeah, can see 50% Fibonacci retracement here is very close to our first support. And then if the price can break out this line and break out our first support, the next one could be at around here, our 61.8 Fibonacci retracement here is very close to our second support. And then here is also another swing high, and here is swing low, right? So in this market trend, the price dropped from the swing high to swing low, right? So here is also Fibonacci retracement, and here I think the 50% Fibonacci retracement could be support our first resistance. Okay. So here is our analysis for the dollar index today, and then we go for our another pair. So for another one is the Japanese yen, right? And then maybe we can also find some news for the Japanese yen. As usual, today for the Japanese yen, here is not very key news, so I'd like just to skip this area because there is nothing very important to share with you. So we now just go for our chart analysis. Here is our chart. Now, so we go for the SDGPY. Okay, we can have a look at the Japanese yen. As we can see, because of the drop of the dollar index, right? So here we can see the USD yen is dropped a bit after a long-term ascending trend, right? So now we still start from the trend line. Now here, I think we can still draw a ascending trend line, and I think the price still go within this ascending trend line. Okay, so for a valid trend line, there should be 3 touches. So 1, 2, 3 here. So here could be a good ascending trend line. So because it's still a ascending one, so I put it into green. And then we can use some other indicators to help us identify the market trend. Okay, for the Ichimoku cloud, the price is still above the Ichimoku cloud, so it can confirm our idea that the price may go up in the future. So for our next resistance level, I think we can put it at around And for the next one, if you go back, there's no very historical data. So firstly, I'd like to put it around here is in line with some candles before the week of the candles. So if the price can break this resistance level, the next one could be our recent highest price at around 144.9. Here could be our second resistance level. However, if the price touches this area, it may have a pullback trend. So the next support level I like to put it around here is because here is a price before our previous ascending short trend, right? So here could be our support line, our first support line. Okay, I think we can also try to use some Fibonacci tools, but I don't think we can find a very accurate one. So for this one, I think the 23.6 could be a good one. Okay, you can see here our 23.6 Fibonacci retracement is very perfect overlap with our first support. So here could be a very strong support level need us to consider it. Okay, so here is my analysis for the dollar yen today. So now we go for another one. Okay, so another one is the gold, right? I think a lot of people are very interested in the gold price, right? Because in our past live trading analysis, everyone is asking for the gold price. Okay, so because here today is also no very key news for gold, so we just skip it and then go start directly for our chart analysis. So I can share you guys more about from the technical view. Okay, we go for the gold. Okay, we can have a look at the gold now. Because sometimes we can have a look at the DXY and go together, right? So because so if the DXY drop, so people may refer the gold price may go up, and if the DXY price rise and the gold price may drop. So they are very highly correlated. So I suggest you guys to have a look at the these two together. Okay, so now we have a look at the gold price. Okay, so firstly, we'll still draw a trend line. We still try to draw a trend line, but I think you can see here the price has already break the descending trend line because our DXY is dropping. So we can see the gold is going for a very short-term ascending trend. You can see here. Okay. Okay, and then we can still use some other indicators like the Ichimoku cloud right here. Let's see the price is trying to break out the Ichimoku cloud. So we will hold a weak bullish bias for the gold today. So for our next resistance level, I think the price is trying to break out the previous price, right? It's around 1,700 and around 30. I think here is a very key resistance level. Let me show you guys why I think it's a very key resistance level. And the price is, I think the price is almost touches this area, so we just wait for a moment to see what will happen later. So firstly, if you just have a look at the price, you can see here is our previous swing high, here's swing low, and if you go back a bit, you can see here is also a swing high, right? So here is a very good overlap resistance level. Here's 1, 2, 3 touches. Apart from that, we can also use some Fibonacci tools to help us support this key level, because it's a resistance level, so I just changed the name of it. Firstly, as you can see here is first I think we can just use the Fibonacci retracement firstly, and I think the 50% Fibonacci retracement here is a very good overlap with our first resistance level, and then we can also use the relatively long term. So for example, maybe you can see here is a little bit big gap, right? But if you go for the 1 day chart, you can see the trend is very clear and the gap is not that big. So I think this Fibonacci level is also a very good trend line. This Fibonacci trend line is also very good one. So I think for this long-term Fibonacci trend line, the 38.2 Fibonacci level is around here, right? You can see. So we have 3 scenes. The first one, and now we have the 4 scenes, right? So I like to highlight this arrow and then summarize for you guys why it's a very key level. Firstly, because here is that if you zoom in, you can see it's very close to the resistance of the Ichimoku cloud. That's one scene, and another one from the price pattern. Here is a very good overlap resistance. That's the second thing. And we draw 2 Fibonacci retracement, and we can find 2 very key level here. The first one is from here to here is a 50% Fibonacci retracement, and next one is a 38.2 Fibonacci retracement. So we have forces to support this arrow. So that could be a very key resistant arrow, right? Now we just wait for a bit to see whether the price can break this level. If the price can break this level, I think here could be a more clear pullback trend. And for the next resistance level, I think we can draw it at around let me go back to have a look. I think here could be better. Okay, so if the price can break this first resistance level, I think the next key resistance level could be at around here, because here is our previous swing. You can see this candle is touching this arrow, and here is a touch, here is a touch, and here is a very significant touch. So here could be our next resistance level. So I change the name. As well, we can use the Fibonacci retracement. I think this one could be at around 61.8. So here could be our next resistance level. However, I think because here is a very key resistance level, so here is a possibility that the price may drop from here. Here, the price may pull back from our first resistance level, right? So the market trend may like this, is rise to here and then drop, right? And the next very key support level I like to put is here, because here are 2 very obvious swing lows. So I like to put our first support line here at around 1,639. Okay, because there are a lot of people talk about the 1,680 level here, but I don't think the price can go all the way to here, because now we before our previous support level, the price is going for a pullback trend. So I think we still need to wait for some time and look for some fundamental news about the dollar index from the US, and then we can expect what will happen of the gold and the XY, right? So for the short term, for our current forecast, I just want to delete this one and leave these 3 key levels for you guys reference. Okay, and here is our gold analysis, and then we go for our next one. from the. Okay, the next one is the euro. Okay, for the euro, let me try to find some news for you guys. Do we have some fundamental news? Let me have a look. I think today we don't have very key news for the euro, but there are one data we can have a look. Here is the Italy is industrial production month to month, right? So here is the actual data is 0.4%, which is higher than the forecast and the previous one. But however, if we just have a look of this data, here will be good for our currency. But we still need to consideration the momentum of the two currency. Like if we have a look of the euro and dollar, we should see which one have the stronger momentum. So sometimes if you just see one data is not very helpful for your analysis. So we need to combine with more data, right? So because I think this data, although it's very is do good for our euro, but here is not a very significant one. So I think for the euro dollar, we should rely more on the technical analysis today. Okay, so we go for the chart analysis. Okay, we can say today here is for the 4-hour chart. Here is a big rise of the euro dollar. So for one see from the fundamental one, as we see before, here is good data from Italy. But I think the why here is such big drop because our DXY is dropping today, right? So we combine the two things from the fundamental and the technical. Here is a very big rise. But now we can see the price is showing a pullback trend, right? Okay, so but anyway, we can go for our chart analysis now. As we can see, price drop from the last month, like at around the middle of last month, and here is a consolidation area, and now the price is going up, right? So in this case, we can see there is not very clear market trend, but in this case, I think we can use some other indicators. Firstly, like we can use the Ichimoku cloud, and now the price is going above the Ichimoku cloud, right? And then we can use the MACD. We can see the diff line, the signal line above the 0, right? So I think we combine with these two indicators. I think here is more possibility that the price may go up in the short term. So in order to let you guys have a clear overlook of the price, I just close this MACD indicator. Okay, and I just leave our price here. In addition to our indicators, I think we can draw a trend line here. Okay, here is a short-term ascending trend line, right? Okay, good. Okay, so for the next resistance level, I think that could be at around here. If you go back, sorry, I used the wrong line. Let me change it. Okay, you can see here at around 1.02541. Here could be our next very key resistant level here, because here is in line with several swing highs, right? Here you can see here and here and here and here, right? So here is a very key resistance level. Okay, but before that, I think we still need to take note of this area, because here is here is a small swing low, but it's not very significant, and here is a not very significant swing high, but here is also an overlap resistance, and here is very close to our previous candle's price. So I think here is also a resistance level need us to consideration. It need us considerations, but it's not such strong. So I just use the dashed line to dot line to help you guys to pay attention to this line. Okay, and then if the price drop is the price pulled back from our current price, I think the next support level could be at around here. Here could be our first support level. Here is our previous small swing high, a swing low, sorry, and here is a swing high, right? So here is our another overlap support. And then we can use the Fibonacci to help us find some support for our first support line. I think the 23.6 could be a good one. Okay, we can see here is a very good overlap with our first support level, right? So here is our analysis for the euro dollar. I think maybe we can still draw a Fibonacci retracement from here to find some support for our resistance level. Okay, the 78.6 Fibonacci retracement is very close to our first resistance, so I think there has more possibility that the price may locate in this area. So I just highlight this for you guys. Okay, so here is our analysis for the euro dollar today. Okay. And for next one is the Swiss franc. Okay. Okay, we have a look of the Swiss franc. If you follow the price of the dollar franc, maybe you can have a look. Here is a double top pattern, right? So if you notice that before, you may catch this drop trend, and maybe you can earn some money from that, right? If you sell and if you find this pattern again, maybe you sell here is you may catch a lot of profits, right? Okay. And then because here we still have we already have the Ichimoku cloud here, so I just leave it here for our analysis. And another thing is here is a long-term trend line, right? The price has already break this trend line and combined with the double top pattern, so here could be a clear dropping trend. But I think the price has already touched its very key support level at around 0.9550. So the price may consolidating a bit and then go for another trend, right? I like to help you guys highlight this very key support level. Here is our very key support level, because here is our previous swing low right here. And we can see the wick tried to test this area, but it didn't successful, and it tried again, but now the price is still trying to break this key support level. So maybe we can wait for a while to see whether the price can successfully break this very key support level. Okay, and then we can try to find the Fibonacci retracement like around 31.8 here. So we can wait for a while because I think the price is pulled back from this very key support level. So let's see what will happen later. If the price can break this support level, I think the next key support level could be at around here. That's around 0.94816. Here is our second support level. Here could be our first support level. So if the price can break this level, the next one could be at around here. And I think the 78.6 Fibonacci retracement could be a very good support for our second support level. Okay. And then because here is also a very clear trend, right? And we draw from the swing high here to our swing low here. Here we can see our 23.6 Fibonacci retracement is very close to our first resistance level, because here is a very key resistance level, because from the price pattern, here's our previous very two significant swing high right here. Sorry. Okay. Here are very two significant swing high. In here, the swing low price tries to test this area for some times, but it didn't successful and then go up from this level. So I think here could be our next very key resistance level. Okay. Okay, so here is our analysis for the dollar Swiss franc. And now we can go for our another pair. Let me have a look. What is that? It's pound. Okay. For the pound, we can go for, I think here are lots of data from pound data. We firstly have a look of the chart. Okay, we have a look of the news of the pound today. And you can see for the GBP here, a lot of data come out today. The GDP month to month, and the construction output, and the good trade balance index of the service, industrial production, and the manufacturing production. For the overall, I think here for the overall, the data is not good for compared with the forecast and the previous expect from the good trade balance. So if you only have look of the GBP data today, you may see the price may drop, right? Because more data are not good, right? It's lower than the expectation and previous. But if you have the look of our chart, right, you can see here is the uptrend for the GBP and USD, right? That is what we talked about before. You cannot only just have a look of the fundamental news for just one currency, right? You need to compare the momentum of the two currencies, right? But for the GBP USD, because the USD the dollar index is also dropped, right? So here is so that's why here is an uptrend instead of a descending trend. Okay, so now we have a look at the chart. Firstly, we open the Ichimoku cloud and we can see the price has already breaking the Ichimoku cloud. And then we go for the descending trend line. We can see here is a breakout, right? So we change it from right to the green to the right, okay? And so for the next resistance level, I like to highlight it here. Here, I think you guys should pay attention to this level very carefully, because here is a very strong one, right? The swing low, and swing high right here. So here is from the price, here is a very key resistance level. And then if you draw a retracement from the swing high here to the swing low here, maybe 38.2 Fibonacci retracement is also very close to this level. So here is a very key resistance level need us to consider, right? And then if the price can break this resistance level, the next resistance level could be at around here. Here is our second resistance level. Because here is also our overlap resistance. We have the swing low, swing high here. And for the Fibonacci, I think the 50% could be at around this area. Okay, but for the Fibonacci, we didn't find a very good support, but from the price pattern, if we go back, okay, we have 1, 2, 3, 4 touches. So here is a also very good resistance level. Okay. However, I think the price don't have such strong momentum to rise to this resistance level in the short term. I think here is here the more possibility that the price may go up to touch our first resistance level and then pull back a bit. So the price trend should be at around here. It could be at around like this. Okay. So if the price pull back from our first resistance level, and then the next support level could be at around here. Okay, and then we also draw a Fibonacci retracement. Okay, 38.2 Fibonacci retracement. Here is in line with our overlap with our first support level, and our first support level is also touches our previous swing high here and here, right? So here could be our key support level. Okay, so here is our analysis for the GBP USD. Okay, and then we have look of we move on to our next pair. It's Australian dollar. Okay. Here is also very neat key news for the Australian dollar today. So we have just have a look of our chart. We can see here because of the drop of the dollar index, right? So here is a very big movement of the Australian dollar. Okay, then we go from start from to draw a trend line. We can see the price is still within the descending trend line, right? But the price is trying to break this descending trend line because he's going within a pullback trend, right? And then we have a look at the Ichimoku cloud. Okay, you can see the price is also touching the resistance of the Ichimoku cloud, right? So here if the price firstly break the descending trend line and then break the resistance of the Ichimoku cloud, so here could be a double breakout, right? So here could be a strong signal that the price may go up a bit in the future. Okay, so if the price can break out these two resistance, the next resistance level could be at around here. Can I move it a bit backward? Okay, cool. So here is our next resistance level. Okay, the first resistance level. As you can see, here is our previous swing low, right? Swing low, another swing low, and next touches, and next touches. Here's touch out. We skip one, and so here we have six touches. So here is a very key resistance level, and then sorry, and then we go for the Fibonacci retracement. Okay, I think there's no very clear Fibonacci retracement to help us, but for the price is strong enough, right? Okay, so I just delete it. So we cannot find a very good Fibonacci retracement to support our idea every time, right? So firstly, our logic is firstly we rely on the price pattern, and then we try to use Fibonacci levels to support our ideas. So that is the process. And then, because the price is under two resistance, right? So the price may pull back from here. The next support level could be at around here. Here is previous price at price rise, right? So here is our first support level at around 0.68318. Here is overlap support. Here's 1, 2, 3 touches. So if we go back, okay, I think this rate is strong enough. So here is our first support. So here is our analysis for the LZ. The key resistance level at around 0.69511 and the support at around here. Okay. And then we go for the Kiwi Dollar. So the Kiwi Dollar pattern is very similar like the LZ, right? So because the two currencies are has a very highly correlation. Yes, so we can see the price pattern is quite similar, right? And then we still try to draw. So our logic will be also very similar. So firstly, we draw the trend line, but I think Kiwi Dollar is a little bit massive compared with the LZ, right? Trend line here, but I think we can draw a trend line at around here. And I will give you guys two methods. The first one is we can see the price. Here is a descending trend line because here is 1, here's 2, here's 3 touches. So we can see the price has already break this descending trend line. So I move it into the green. It is already a breakout. And then I think maybe we can try to draw a Fibonacci, we can draw a descending channel here, right? We can try to make a small adjustment. Okay, cool. To be honest, this is not a very perfect descending channel, but it's still a valid one because we can see from the upper band there are 1, 2 touches, and from the lower band here is also 1, 2, 3 touches. Although here are some breakouts, so it's not a very perfect channel, but still can help us to do our analysis, right? Okay, I just delete them. And we can see if we zoom in, the price is also is already break our descending trend line, but it's trying to break our descending channel and our resistance of the Ichimoku cloud. So if the price can break out these two resistance successfully, as it's very similar with LZ right here, could be a more clear ascending trend. But for the Kiwi Dollar, the next resistance level could be at around here. Okay, here is a very, very strong resistance level. If the price can break out these two resistance successfully, it may touch this resistance level at around 0.61916 because you can see here's 1, 2, 3, 4, 5, 6, 7. It's a very key resistance level. And then we can also use the Fibonacci retracement from the swing high here to swing low here. And maybe the 30, okay, so I just highlight this arrow, okay? The 60 is very close to the 38.2 Fibonacci retracement. So I highlight this arrow for you guys. Here is a resistance arrow, right? And I put it into the right. Okay, and then another situation is the price cannot, because we can see our current candle is the right one, right? So if the price cannot break our two resistance, the next support level could be at around here. It's our first support. Here's our swing low, right? Swing high and swing low. That's around 0.60763. Here is our first support level, and we use Fibonacci again. The 50% Fibonacci retracement is in line with our first support, so I think this is also a key support level need us to consider. So here is our analysis for the Kiwi Dollar, okay? And I think I already covered all the major pairs, right? Oh, we still have two, okay? CAD. Okay, CAD. So if you follow the CAD pattern, you can see here. In this arrow, here is a possible a double top, but it's not a very typical double top, because if we draw neckline here, the price has already break out this neckline, right? And here is also a movement, and here's some consolidation. So I like to say it top pitch pattern instead of a very typical double top pattern. But anyway, it can help us to identify the market trend that there may be a bearish trend, right? So firstly, is from our pattern, and secondly, the price is already break the Ichimoku cloud. So here could be, and thirdly, I think for the short term, we can still draw a descending trend line here. So we combine with the three signals here could be a descending trend line, right? So the next support level, I think that could be at around here. Here is a very significant swing high and swing low, right? The price touches this arrow for a lot of times, right? And then if we draw a Fibonacci retracement from our swing low here to our swing high here, we can see 50% Fibonacci retracement is very good overlap with our first support level. So I think here could be our very strong support level. So if the price can break this support level, the next support level could be at around here. As well, it's a very good overlap support, right? Swing high, swing high, swing high, swing low, swing low. We have 5 touches, right? So here is our, and I think maybe the 61.8. Okay, 61.8 is very close to our second support level. Okay, and then if the price touch this arrow and have a pullback trend, I think the next support level could be at around here. resistance level. Here is a very key resistance level, because you can see here is the weight of the our topish pattern right here, the swing low of our topish pattern here, and here our swing low and our swing high. So here could be a very strong level, and then I think the 50% Fibonacci retracement could be at very close to here, right? Okay, the 50 or the 38. Okay, then the 50% is very close to this area. Okay, so here could be our strong resistance level. Okay, and then we go for our last pair. Is not the pair, is our commodity, right? It's the oil. We go from, I think we can have a look of the day chart first, because it's more clear. So for the day chart, right here is the descending trend line. A descending channel, I think, could be better. Okay, and then we go for the 4-hour chart. I think for the power chart, we don't have a very clear descending trend line, but we can see from the other indicators, right? The price is going within the long-term descending channel and below the Ichimoku cloud, right? Although here is a short-term pullback trend, right? So for the long term, I think the price still within the descending trend, but from the short term, because price is pulling back from our first support, so from our swing low here, right? So our next resistance level could be at around here. It's not very clear, so I just leave it here. Here it could be more clear, right? Here's our overlap resistance level. And I think 61 point Fibonacci retracement is very close to this area, right? Okay. And I think before this resistance level, because the price also touches this area for a lot of time, so I think here could be our intermediate resistance level. I just highlight for you guys. Here at around 95.9 is our intermediate support resistance level. And then our next support level, very key support level, is our swing low at around 88.2. Okay. Okay, so I think here's our analysis for the oil price. From a very long-term descending trend line, the price now is showing a pullback, but I think for the long term, it may drop again to our first support, but we still need to have a look of our fundamental news and then see what will market go for. Okay. So I think we have already covered out the very key major pairs and some important commodity like gold and oil. So thanks guys for attending our today's webinar. I hope I give you some idea and maybe you learn something from our today's webinar, right? So anyway, very happy to have all you guys here and have a nice day. Goodbye.